discuss a little bit of tips. We have the director of a payment system in Tanzania who worked tirelessly together with the team and the previous leadership and the bank to put efficiency. But again, efficiency also from the industry. Secondly, it's intelligence, enhancement of intelligence, the ability to be able to quickly analyze, understand your customers, understand your market segmentations, understand product designs and the like. The third, increasingly interconnectedness and interdependencies, not only domestically but across the world. With technology, anything happens in Tanzania, it can happen anywhere. Be it a WhatsApp payment, a WhatsApp bank, digital banking, it's across the world. The fourth is data generation. An enhancement of data, the capability of the world now to generate, produce, store data has just skyrocketed. It's out of the roof. And that, of course, as most people say, and that's a fact, data is the new oil. And I won't talk so much about, but there's so many issues there. Data mobility, data ownership, cloud, data management, where should data sit, how is my data used, and how do you use data for artificial intelligence, and even understanding the culture of a population or a segment of population. The last one is emerging technological innovations. And this one mentioned the AI, the Internet of Things, the use of softwares, which emerging softwares like blockchain and the like, and cryptos, and all those that underlying through the emerging technology software that I've just mentioned. And of course, the biggest of all that's really going to increase the speed of computers that we all know is the quantum algorithms, quantum computing. And the future is just so bright, and the future is happening very, very quickly. So having said those ones, there's a flip side to this, and the flip side to this, which I know the team will discuss, is the risk management pressure that all this technology is building up as we see. And two things that we really need to look at. Number one is to have that mindset of the parachute mindset. So there's this saying that the optimist invented the plane, but the pessimist invented the parachute, right? So we all need a parachute, looking at it from a good perspective. So that's risk management. Now, one thing that I'll just mention, not to mention consumer risk, cybersecurity risk and the like, but we saw recently social media causing some bank runs. CBMV and the loss of shares of almost 12% shares of Credit Suisse was lost in one day, just because some journalists wrote in a tweet that this major investment bank is on the hinge. And that was retweeted by the investment.com. It went multiple times, became viral, and the losses went down to 12. Of course, Credit Suisse had, from 2019, it had problems, and it compounded to that particular incident. But quite interesting is SBMV. Now, in SBMV, the Silicon Valley Bank, we know that 40 billion, which is 1/5 of the value of the deposit of CNB, were lost in 2 hours. So what really made that possible? Number one, social media. Tweeting along the society. But secondly, there is an ability to use your digital payments to withdraw, right? So you see the flip side of the benefit of technology. Now, what does that mean? And I'll end with that. It means now regulators and service providers need to embed new technologies, AIs, internet scrapping, to understand and be ahead of what's really happening in social media. Because a rumor monger and a rumor peddler can actually cause a bank sprint, not a bank run, because it's quite very fast and things can change quickly. With that, ladies and gentlemen, I'm now going to introduce you a very distinguished and able panelist that I'm honored and humbled to call upon the floor. I have one panelist who is a very experienced practitioner, Mr. Mr. Kamal Quida, Chief Executive Officer of Bidcat Bangladesh, is online. He will be coming in. But again, if you don't mind, Mr. Kamal, today is Women's Day, International Women's Day, and I know you've been with us for some time, went through. If you don't mind, and I know you don't mind, you're a gentleman, and therefore we ask Professor Olainka Davis-West. She's a professor of information technology from and an associate dean from the Lagos Business School, Pan-Atlantic University from Nigeria, to do a keynote for 20 minutes. And then you will also be allowed to move for Mr. Kamal. Thank you for your indulgence for the same. Ladies and gentlemen, put your hands together for Professor Olenika. Thank you. Welcome, Professor.
Okay. Good morning. Does it work? Can I have my slides up, please, IT team? Good morning. Thank you. Good morning, ladies and gentlemen. Greetings from Nigeria. So I think in the spirit of being here and being glad to be here, I think I want you all to adopt me as your Nigerian sister. So can the ayes have it? Thank you very much. Great. Thank you very much. And it's great to be here this morning to talk to you about technological innovations in financial services. And I'm going to do this in 3 sections. First of all, there are 2 big words that we need to talk about. Can I have the next slide, please? I don't have a clicker here. Great. Okay, so we're going to do this just setting the context and having a background, and then we'll talk about technological innovations and the whole 4IR and emerging technologies, and then I'll also bring you into technological innovations, but looking at what's going on in the world, and then also just grabbing some use cases which will resonate because they've been coming up in conversations for the last 2 days, and then I'll conclude with certain recommendations or proposals as to what we need to do to ensure that we can sustain this global revolution. Thank you. Next slide, please. Next slide. Thank you. So when I think about resilience, and there are 2 big words we're thinking about today, right? It's resilience and innovation. For me, first, I look at the Sphinx. I was in Egypt late last year, and I went to the Giza. And this is a statue that has stood for more than 4,000 years. And I think when I think about resilience, that's what I want us to think about. But more or less, the World Bank will define resilience as basically ability to withstand, adapt, and recover to shocks and stresses. Withstand, adapt, and recover to shocks and stresses. And we've seen a global world of issues. We mentioned the 2008 financial crisis. We've mentioned COVID. And so we're still recovering. Right? So we're not out of the woods yet. So when we're thinking about resilience, it's really about how do we begin to build that stability and build the stones, the limestone that would withstand years and years of weather, climate, and any other shocks that are coming our way. Because you know what? We don't know tomorrow. So we all have to be prepared today with what we know, thinking about how are we going to better prepare ourselves. Then the next thing we need to think about is innovation. Next slide, please. And when I think about innovation, for me, from a digital perspective, it's 2 things. Creativity. What can we do with the mind? And when we think about digital innovations, it's really about we're developing new technologies, and we see a lot of that with the big techs in America and China building out and coming up with new innovations. But then again, we're also applying existing technologies innovatively and creating innovative ways to use new technologies. And the 2 are creative applications. So when we think about M-Pesa and mobile money, it was a creative application because what they did was taking a mobile phone and taking financial services and a store of value and putting it all in one box and saying, you can do this. Right? And so we need to continue thinking that innovation is not just about sitting in a lab and bringing out something new, but it's the incremental innovation that will continue to move us to the promised land. Next slide, please. Next slide, please. So let's talk about some of these emerging technologies. And when we think about the 4th industrial revolution, we talk about the world is the 4IR, we've missed the industrial revolution. But I think that in sub-Saharan Africa, we're scratching between the 3rd and the 4th. Or maybe sometimes the 2nd and the 3rd. When the power went out, I laughed because for us in Nigeria, that's just a norm. We don't break into a sweat, right? So, but when you think about it, what are we talking about when we talk about the 4th industrial revolution? It's really about hyperconnectivity. hyperconnectedness. And when you look at it, it's happening in three realms. It's happening in the physical realm. We look at the autonomous vehicles, the self-driving cars. It's happening in the biological realm when you think about digital gene editing and cloning and things like that. But it's also happening in the digital realm. And in the digital realm, we're seeing a lot more of information flows that are going back and forth. So next slide, please. And when we look at this, I follow technologies. This is what I do for a living. So every year I advance and update this chart. And there's many technologies that we need to be looking at. And unfortunately, you're not all technology people. And then that's also part of the challenge. We bring these new glitzy modern toys and we say, oh, MD, we need this, we need that, right? But then again, all you're asking is, what's it going to do for me? What problem is it going to solve? But then again, when we look at, for example, social media, cloud, and mobile, or we call it SOCOMO, right? This phone is more powerful than what put a man on the moon in the 1960s. But yet we're carrying it in our pockets. So how can we exploit those? And we have different technologies. We have Web 3.0, which means that I own my own data even on the internet. So the internet is decentralized. We have Internet of Things. We're all wearing wearables one way or the other. But these things are tracking us every minute of the day. We have augmented reality. We have virtual reality. We have the metaverse. There's some businesses in India now that are creating financial institutions on the metaverse. So you don't need a branch. You don't need a website, but you need this metaverse experience. We have open data and open source. So that means that I can get bits and pieces and use and plug into my own. We have 5G. We have, the internet was one of the first global networks that we were using. And after the internet, we now said, okay, we need faster, we need better, we need more throughput and more reliability. So the G's kept on going up. And now we're at 5G. And what does 5G mean? It's hyperconnectedness, right? You're always on, you're always involved, and you're always there. But on the right, I have put 3 technologies on the right because they're also transformational to Africa, enabling Africa the ability to leapfrog. First is artificial intelligence. And yes, we can talk about artificial intelligence, about robots coming to take our jobs and machines coming to do our jobs. But I would like us to think about it as augmented intelligence. Because whether we like it or not, the robots can do the crunching, but the judgment still remains with the human. And so that judgment, we now have to continue owning it, but then owning the fact that we can be assisted. And Kennedy mentioned efficiency. You want everybody to do things better, faster, quicker, right? And one of the mantras of self-driving cars is that they don't sleep, they don't text, right? And they're just continually doing the work. Data is another thing that we need to think about. Data is the new oil, as they say. And I think somebody mentioned that data is one of our biggest assets. But, because it's intangible, we don't really value it. We don't see it. But then there's data around us everywhere. And what do we do with what we know is really the way we need to think about data. Are we analyzing it? Are we driving insights from this data to enable us make better decisions? And then finally, distributed ledger technologies, or the chain of blocks, or blockchain, right? And again, unfortunately, we know blockchain for nefarious activity with crypto. But then again, blockchain has immense possibilities and use cases that we can use to drive and reduce the cost of delivery of services. For example, it's cheaper to transfer money on a blockchain than it is to transfer through traditional networks. And those are some of the things that we need to think about. It's not about either or, but how do we use these things safely to ensure that we can bring services to all? Next slide, please. In the case of financial services, one of the things we've been hearing over the last decade is, the customer experience, right? We're driving a customer experience. We're driving a user experience. And this experience matters. And when we think about this experience, we really have to think about it from the perspective of when we're thinking about creating products, when we're thinking about delivering products, and then when we're thinking about servicing our customers thereafter. And from that value chain, you find out that there's technology in everything that we're doing. So this customer experience, this need for better services has also been what has invigorated the fintechs and a whole new world of technology services. That's why we now have in every sector, agricultural technology, ag tech, health tech, clean tech, etc. Because what they're telling us is legacy businesses, you were not thinking about the customers, You were just thinking and doing your own thing, hoping that the customers will meet you. But again, with data, customer trends are changing and evolving. And how are we as businesses evolving and changing to meet those trends? One of the panelists spoke yesterday about business models. To what extent are we changing our business models? Because what some of these fintechs, all they're doing is bringing new business models to the game. And all of a sudden, ooh, it's a shiny modern product that we were not able to do. Next slide, please. And when we think about all these things, this is an IMF chart about what fintech is like, or what fintech looks like. And basically all they're saying is that there are 5 simple propositions in financial services. You want to pay, you want to move money, right? You want to save money, keep money, you want to borrow money, you want to manage your risk, or you want to get advice. And when you think about these 5 key propositions, what they're saying is that there's the traditional model, but there's still gaps. And we're talking about these gaps in terms of literacy, transparency, etc. And then there's the different technological solutions, and then we're bringing out new technological innovations and solutions. And what this means is fintech really, there's an acronym called CLASSIC that we use to describe fintech. And the C stands for customer-centered, because they're always thinking about the customer. The L is legacy-free, asset-light, scalable, simple, innovative, and compliance-light. And that's really what they're doing, and churning out some of these new ideas and new solutions. Next slide, please. So when we think about all these things, okay, so what? And I think it's always nice to take a step back and say, yes, so we have all these new technologies. And don't forget that what we're here to talk about is how do we use innovation to catalyze resilience? Because we can have all the innovations in the world, and again, one thing that we also need to remember, it's a double-edged sword. As I'm driving efficiency, I'm also driving risk. Because again, I'm introducing new risks into my model and into my system that maybe I don't even have the capacity for. So when we think about catalyzing resilience, I think there's 5 things I want, or 5 use cases I want us to think about. First of all, are we deploying digital products and ultimately transforming into digital businesses? Because I don't think we're banks anymore. I think we're digital businesses that are offering banking services. Because everything we're doing is digital. Correct me if I'm wrong. You know, the room has gone very silent now, and I'm worried. Huh? People want to run out of the room and say, I need to find another job. No, we all need to be digital natives, that's all. Another thing we need to do is reduce information asymmetries and improve productivity and efficiency through prompt and evidence-based decisions. A lot of us make decisions based on my gut or based on what I did last year. But then again, the context and the terrain keeps changing, right? Social media is there. A tweet is 160 characters. So you can imagine what 160 characters can do. When Kennedy mentioned the Credit Suisse issue, 160 characters. The next thing we need to do is about how do we cooperate, co-compete, and collaborate. And being connected and continually building linkages, because no man is an island anymore. The next thing is how do we ensure that we're inclusive and we leave no man behind? And finally, how do we ensure that we keep the environment safe and sound and stable? So I'll go to the next slide and let's start talking about this. And these are going to be in 5 different sections: digital transformation, building information orientation, being connected and always on, and the shadow economy, as well as talking about financial crimes. And all these things have been mentioned in the last 2 days. And again, there was no scripting or passing on as to what's going to happen. Next slide, please. And the next one now. So let's start with digital transformation. You know, I think there was a cartoon I saw that, you know, who drove your digital transformation, the CEO, the CIO, or COVID-19? And guess what the answer was? COVID-19. Because a lot of us, since the turn of the millennium, the next slide, have been sort of reticent about implementing technology. It's not safe, it's not this, we don't know about it. But then COVID happened and we all had to jump. So the next thing about it is that can we jump by design rather than being jumped into compulsion, right? And what does that mean? Digital transformation means a lot more than just bringing in technology. It means looking at our entire business and redesigning our entire business around the new technological systems. It means changing our job descriptions and our roles. It means changing sometimes the structures that we have in our organizations. So there's more to digital transformation, and it's really about evolving us towards a digital business or a digital first business in that sense. The second, next slide, is about data, information orientation. And I have two sides here. On the right side, we know that this ability to get information has given us the ability to provide digital financial services, right? And we can move money, information flows, financial flows digitally. But on the left-hand side, it's really about information orientation or data orientation. One of the big challenges is a lot of us are not very used to making decisions using data. Either we don't have the right data in front of us, or we just want to use our normal sources. But then again, the world is moving towards being more data oriented, or as they call it, data-vorous organizations, right? And how do we think about it? Even from the supervision perspective, there's a school of thought that says, you know, we've gone from rule-based to principle-based to data-oriented supervision. Because the bottom line is, you know, when the previous panel was speaking, we don't need to wait for bank examinations if we have it right, right? We can use technology and AI to predict what's going to happen. Because again, we've trained the data, we've trained the system to say this is what has happened before, so it can give us early warning systems, so we're not caught unawares. And that's the way supervision can work. But it doesn't mean you still won't go into the bank if you want to, but there's different ways to use the data to make the right decision. So when you go in, you can actually be very focused and very, very laser focused on what you're looking for. The next slide, please. You know, yesterday we witnessed the launch of the TIPS, which is all about interoperability. In other words, I can move money between different networks, assumedly. But then this is all about connectedness, and we began to like connectedness with the internet. But connectedness also has two challenges. In Nigeria, I said that, you know, I tell my bankers that the thief is no longer coming through the door, because we put in dead man doors and expect everybody to go through these dead man doors. But the smart thief is already in through the cables. So while we're connecting, we also need to think about how do we build our human firewalls, because it's no longer about system firewalls. It's also human firewalls, because we are also a risk. You know, we get malware, we bring in ransomware into the organization system. So connectedness is also something we need to think about. And if you imagine, maybe 10 years ago, we would never have imagined that people would be connecting by Zoom, right? We would have said everybody aggregate physically, but it's allowed us so much more possibilities in the world we look at. And it's also allowed us to reach customers in rural locations and different locations. Next slide, please. Now, this issue about illicit transactions is something, or a shadow economy, something that we need to continually think about. But again, using technology, how do we ensure that we leave no man behind? How do we ensure that using digital IDs, we can also meet the standard setting bodies regulations, so we're not also running foul of the law? Because interconnectedness means we're all related. What's my life got to do with the subprime crisis in America? But then again, it affected everybody. So we can't run away from the fact that financial systems are global, and we need to ensure that there is sanity and sanctity within those systems. So we have technologies like, I'm done, don't worry. We have technologies like blockchain and cryptocurrencies that assume or give you some anonymity and privacy. But then again, for us, it's also scary, because again, that means traceability becomes a problem. But I think that it's about understanding how to leverage these technologies rather than not allowing them to work in the certain environments that we want them to. Next slide, please. And one of the things I've been doing is following the global Findex rankings for the last 8 years or 12 years since they've been run. Next slide, just continue pressing. And as you can see, the top is the internet banking applications, the bottom is mobile money accounts. And as you can see, since 2011, there's been a progression in terms of mobile money is bringing on more people into the system, because again, it's not that the requirements are different, but it's just a bit lighter on the people. So when we think about choice architecture from a behavioral perspective, it's really about helping people make easy decisions rather than making things easier for them to access, not putting loopholes and hurdles so they can't access it easily. The next slide, please. Financial crimes we've talked about in terms of how do we ensure that we're putting in the right structures and systems to secure the way we store data, the way we transmit data, and then the way we transact with data. Because one thing we need to be mindful of is that even if you stored it, when you're transmitting it, it can be intercepted and manipulated at that point. And that's where we have blockchains and anonymous systems and distributed and centralized. But again, I think it's also about how do we use technology and artificial intelligence to understand fraud? Because you see, the fraudsters are in our systems already. And it's about identifying trends and patterns. Someone spoke about the Hawala earlier on, right? What are the trends and patterns? And then this is where technology can help, because a human can't really look at that those vast amounts of data. Thank you. Next slide, please. So I am concluding now, Kennedy. So in conclusion, ladies and gentlemen, I think for me there's 5 things we need to think about or do better. And this is really about, first of all, we need to become people-centered, or customer-centered, or customer-focused. Then we also need to continue making continuous investments in digital innovations. We need digital, strategic, visionary leadership. We also need the talent pools, and this is not just talent pools from the technology side, it's all of us. Because whether we like it or not, we are also going to have to interact with these technologies. And so it's all of us. How do we unlearn, relearn, new tools, new techniques around doing our work? You know, last night I was on a class on prompt engineering in artificial intelligence, right? Because these things are important. We all need to know them. But then again, we have to take the time out to learn. And then we also need evidence-based policies. But in the middle of all this, I think, is research and context. Because we're not going to cut and paste, because the trends and environments in different societies differ. So thank you, ladies and gentlemen. Asante sana.
Thank you very much, Professor David West, and please join the stage. And now, ladies and gentlemen, before we are going to invite the other panelists, I would like to call upon our online speaker from Bangladesh, Bikash. Over to you, Mr. Kamal. Mr. Kamal?
Yes, sir.
Yes, you have 15 minutes. You're welcome.
It's nice of all of you to invite me. And Tanzania is someplace very close to my heart. I visited there first 2005 on my way to climb the Kilimanjaro mountain. Since then, I visited the place many times and learned a lot from your neighboring country, Kenya. So I think it's very important, Kenneth, I say a little about what I do, because that gives the perspective of my view and my thoughts.
Sure, you can. Please go ahead, Kamal.
So I'm a practitioner. I start a business with a bird's eye view, but I operate with worm's eye view because I'm in the ground and I deal with ground reality. So I founded a company called Bikash, which has now 75 million verified registered customer. And it's a tightly run ship. Out of 75 million, we have 32 million MAU, so monthly active users. So, and we do around 13.5 million transactions per day. So what I started as with a $5 million seed capital in 2008. In the latest round, we had to raise $250 million 2 years ago. So the reason I'm sharing this thing with you is just to give you a perspective, so you understand the scale. The total velocity of our platform last year has been $96 billion worth of Bangladeshi taka. So it has transformed the way common people do small businesses or small activities. It started from a very simple research. And the research was that poor people, when they go to a bank to transact, or poor people or rich people, doesn't really matter. When people go to conventional banks, it costs $1.28 for the bank to offer the service, the footfall cost of the bank. But when it comes to poor people, their transaction ticket size is usually less than $10. So when the customer's footfall cost for the bank is $1.28 and the transaction size is $10, there is no way the conventional bank can provide service to poor people. So how do you bring poor people into formal financial service? That was a challenge back in 2008 I was struggling with. And that gave the genesis of creating bKash. And after almost 14 years today, 16 years, I would say, 16 years, I gave you the number, and bKash has 6 shareholders, the largest developing agency in the world, BRAC, which is also very much active in Africa. BRAC has a bank, BRAC Bank, regulated by Central Bank in Bangladesh. So BRAC Bank is a shareholder. Money in Motion, a company I founded in the US that provided the risk capital, they are a shareholder. Bill and Melinda Gates Foundation is a shareholder. International Finance Corporation is also part of our cap table. Alipay of Alibaba affiliates. And finally, SoftBank, they became a shareholder. So all these forces were brought together to create this transformative solution. But how it contributes to the resilience of an economy which is emerging, that's what I want to talk about. So the first thing to talk is the way fintech happens in countries like Bangladesh, Tanzania, Kenya, this kind of emerging economies, is that if you create a solution which is totally state of the art, they're not relevant to us. They became a theoretical solution, and they became a solution which is a replica of Silicon Valley. That doesn't solve our problem. So if PayPal is brought to Kenya or Tanzania, it's not going to work. Kenya and Tanzania and Bangladesh, we require agent network, where the customer can top up their wallets. Now that creates a group of economic forces, and those forces are also part of solving the problem. So then your economic risk gets spread across the society and the country. So any shock, kind of shock that global financial crisis people saw in 2008, those kind of shock really doesn't impact for a service like us. Kenneth, you were mentioning about Silicon Valley's crisis, social media crisis. But just think about how many crises Kenya had in last 15 years that M-Pesa is live. Many of these crises are ground shaking, but it did not really overnight made M-Pesa disappear, because it is actually, there are small pieces, small individuals are involved into this ecology, and that's makes it so resilient. So one beauty of fintech for countries like ours is that it creates a very resilient solution. I'm going to give two other example of this resilience behavior. So one, I just said how you create an ecology, agent network, distribution. And the next thing is payment. So instead of sending money home, you want the digital money to be used for payment purposes. And when you do that, you also again bring lots of forces. Those are not subject of small shocks. And I'll give a tangible example first. See, when you look at the bond market, you'll always see the municipality bond are very stable. Municipality bond of a small city in the US. I do not know if Arusha or Darussalam have municipality bonds. But in the US, municipality bonds are very common. Small towns, small cities, big cities, they all offer municipality bond. Now these bonds are structured in a way that whether the economy is doing well or not, whether COVID-19 takes place or not, people pay their utility bills. People pay for their water bills. People pay for their road cleaning bills. And as a result, the municipality earns their revenues. So these bonds are also extremely shock-proof. So countries like us, when we offer payment, we are the acquirer of large number of small shops, mom and pop shops, to organized grocery stores. So they also create an ecology, whether you will face a big impact or not. Those basic things, those grocery buying some apple and buying some flour and buying some rice, buying some chicken, those will continue. So like the municipality bond, payment infrastructure is also very shock-proof. And that, again, that contributes in the resilience of a society. And as you asked me to speak on the impact of technology and innovation in creating financial resilience, these two examples I can give is very relevant and very real. And the third one I want to talk about is a bit hypothetical.
That will be the last part for now.
Sorry?
That will be your last point for now because of time.
Kenneth?
Yeah,
Kenneth?
Please
I don't want to
continue.
sound rude. I don't want to sound rude, please. You have made me 40 minutes late, and then I started this session. So allow me to speak with my flow. If you want me to stop, I'll stop right now. But I'm also attending from far away, so you need to allow me to speak.
Please continue.
If it's an issue for you, then I can stop right now.
Now continue on the third point. Thank you.
Thank you. Thank you. So the other point I want to make, if you come to see from my little experience in Tanzania, that Tanzania, the way the Serengeti plain is created is from the volcanic ash. And the volcanic ash creates fertile soil, and that allows the animal to come, and it creates a fantastic ecology. Financial inclusion is also something like that. Is that it's a society, it's an ecology where every individual participates. And when every individual participates, that creates a kind of force that's by default is very resilient. Okay? So in the case of say, I'll give an example of bKash, and maybe similar thing applies to M-Pesa as well, that everybody participates through a small store value account. And that store value accounts, when you have participation of 75 million people, it creates a massive pool account. Now, it's very common that in middle class and upper middle class or rich people, they will participate, they will make a saving, and through the saving, a pool will be created, and industry would be financed based on those capital pool. But now technology is allowing very poor people, in Kusumo, a very poor people in Dar es Salaam, or very poor people in the slums of Nairobi, are also participating in the capital pool creation. And that capital pool then is maintained in a trust cum settlement account. And that capital is then used for social and economic development. So again, it's a very good example how Kenya has capitalized it, Tanzania is doing, and certainly Bangladesh is doing it, that technology is allowing millions and millions of poor people and common people, rich and poor, irrelevant, are participating in the economy. And that makes the economy even further more resilient. So with that note, I'm going to stop. If you have any question, I'm happy to answer that. Thank you very much.
Thank you very much, Mr. Kamal. We're really privileged to have you with us, and thank you for your patience with us, and we'll be having some follow-up questions from the floor. Now, ladies and gentlemen, I would also like to invite to the stage the following distinguished panelist, Mr. Epimac Mbeteni. He's the e-commerce director of Vodacom. Please put your hands together for Epimac. And we have Mr. Faraz Hamad. He's the chief executive officer of Azim Pay. A round of applause for Mr. Faraz. Thank you. We also have Dr. John Sausi, director of Financial Information Systems and IT Services from the Ministry of Finance. Thank you for Mr. Dr. Sausi. And last but not the least, Engineer Benedict Ndomba, Chief Executive Officer of E-Government Agency. A round of applause for him. Thank you. Thank you so much for joining us this morning. A few questions that I'm going to ask each of the panelists, but again, we'll also come back to Mr. Kamal, who has been patient all this while. And I'll start with Mr. Faraz. You're leading one of the emerging fintech players in the market, and you've come in at a time which is right and ripe. So there are several financial services technologies that do emerge in this market, and startups are facing several challenges. So how would you speak to upscaling and adoption of use by the population? We've heard from the two notes, from Mr. Kamal and also from Dr. Professor David West, with your own experience and how this market is potential to expand. Are there any challenges startups that are facing, and what you should do to adopt use cases in Tanzania? Welcome, Mr. Faraz. Yeah, and we'll just do a round of 5 minutes, 5 minutes. We've been given some time, so let's do 5 minutes each, and then we get several follow-up questions. Let me give you this mic. Oh, thank you.
Hello. First of all, thank you very much to the Bank of Tanzania for the invitation and the honor to be joining this panel. This is a bit of also, I wanted to mention, happy to be on the panel with my friend Kamal. Actually, I spent in a previous life some time in Bangladesh and was actually around when he was conceiving the idea of bKash. So it's a full circle moment for me to be here with him on this panel. A couple of points I want to make in terms of solving problems. FinTech has a capacity to play a big role in scaling solutions to existing market problems. So one I would like to draw attention to is something that we're doing in the market called Sarafu. Sarafu is a B2B e-commerce application where manji shops, duka shops can purchase from manufacturers. We all know in Tanzania there's been a massive sugar shortage over the last 2 months. And this has created a spike in the price of sugar in the market, sometimes triple, even quadruple what the standard price is. So this is obviously very difficult for many of the small traders in the market. So one solution that Sarafu can provide to the traders in the market is we can actually control the price of sugar in the market through the application. So in other words, because Sarafu is a fully digital platform and because we incorporate mobile payments, like the ones that Kamal is referring to, we can ensure that the price at which the trader buys the sugar is the price at which the indicative price at which the government has required them to buy the sugar. And that happens, in fact, because Sarafu does not allow cash on delivery. It does not allow payment to a driver. So as a result, when a customer purchases a bag of sugar on our platform, he receives that exact bag of sugar at the price at which he purchases it. That doesn't happen anywhere else in Tanzania right now. So if he goes to an informal market or an informal trader, he might purchase on the phone that bag of sugar, but when it shows up in his shop, the driver may say, "I'm sorry, sir, there's a surcharge." Or it could be that other middleman comes in the way and increases the price. And this is impossible for any regulator, any market kind of oversight to manage, because all these payments are happening in cash. So by integrating the digital payment with the e-commerce platform, what we've done is created an ability for a manufacturer to sell at a price, an indicative price at which they want to in a market which would otherwise be relentlessly manipulated by informal forces. So these are the forces that you cannot see. So what we've done with Sarafu is created a transparency around the pricing in the market to ensure that when trading happens, it happens in accordance with the way that the manufacturers are attempting to address, and the way that the retailers can actually benefit from that and transparency in pricing. So ultimately what we're doing, and in terms of scale, in terms of how do you scale a system like this, what we're doing is we're facilitating trust in the market. And that trust facilitation is what will ultimately drive adoption. Because if the trader can now rely on Sarafu for that pricing, the inventory, and the reliability of delivery, then they can start to plan their purchases more effectively. And that is ultimately how you increase formalization in the market. Now, I'll make one last point before I hand over. We spoke yesterday about TIPS. TIPS being this enabling platform to allow all players to be able to transact at the same type of same pricing, same connection, lowering the barriers of connectivity for financial service providers. I do think that the Bank of Tanzania's foresight with respect to interoperability amongst financial service providers could very well propel Tanzania to become one of the largest, if not the largest, mobile money player in the world. I know actually Kamal presented some very dramatic numbers, and Bangladesh is certainly one of the leaders in the world. But I do think Tanzania can, and it's because of this barriers to entry around transaction processing that could enable that. And what that does, and this is, I'll end with this, is if you want to scale, you have to drive innovation, you have to drive adoption in the market, and you have to drive lower costs in the market. That's what you need to scale. Right now, it has been the case that in some ways mobile money has been a siloed business in the sense that people compete on access to the customer. How do you get access to the customer? Once I have access to a particular customer, I prevent others from getting access to that customer. Okay? That type of competition does not drive innovation. What it does is it actually disincentivization, because what you're focusing on is capturing the customer in your system and not letting them leave. What we need to focus on is competition based on cooperating based on access, but competing based on value. When you compete on value, what you do is you drive down prices and you also push innovation, because then any customer can choose which service provider do they want, okay? And when they make that choice, it'll be based on a value-driven choice, not on an access-driven choice. So as a result, I think TIPS is really the future, and what it should enable is competition based on value, not based on access. We cooperate on access, we compete on value. And I think this is a key point that needs to be fully enabled through the TIPS platform, which means everyone should have equal access and everyone should compete on that value proposition that they can provide. So those are my 2 points, and I'm happy to come back on that.
Thank you very much for us. Thank you for that. Precisely, those 3 points are quite important, and we're going to get back to them. I'll now go to, let me just flip and move away from the market and just move to the regulator and go directly to Dr. Sausi. Dr. Sausi, you're coming from the Ministry of Finance. You've pioneered a lot of innovations that we also benefit from the private sector and also from other regulatory institutions. So from that perspective, how can you see an upscale of Tanzanian technological innovations and services delivered within the context of digital economy of Tanzania? So where do you see the country moving on in terms of potential for cashlight or potential for new innovations that are probably being driven from the centralized perspective, but also from opening up the market to become a digital economy? Over to you, Dr. Sausi.
Thank you very much. When we look at the way we are going now, I think we are going on the right direction. The launch of TIPS now is changing almost everything that we are doing. I'll take an example of the way we currently operate in perspective of the government on the transaction that we make and the data that we are collecting. We had few challenges before, but with this launch and this innovation that are coming, we see that the government and the stakeholder, now they are connected. We have connected the number of services which were not previously connected. I'll give you an example. When we are doing payment to government services, especially when we have one customer who is banking with another bank and government is banking in a different perspective, that has been a challenge to us. But the launch of TIPS now, we can get everything instantly, meaning that the government now can realize the revenue. We can see now we are going in the different direction. When you look at the landscape in maybe the region, Tanzania, we have done a lot in terms of government and in terms of how we deliver our services. And the funny thing is, the private sector now, they have to catch up with what we have been doing in the government. With the recent innovation that we have been doing, we've been getting now challenge when we want to upscale or if we want to roll out our services. Most of the financial services provider, they are not ready for that. The recent maybe launch of government e-Mikopo, that has been a very challenging to some of the service provider. For now, we have like maybe 3 or 4 who are ready for that. And now, when we look at what is the tech behind here? The government employees, now they are not supposed to go to the bank and fill all those required forms. The technology has changed. Now we have introduced our KYC, the government KYC perspective. You can, as a government employee, you can just go in the portal that we have, just click a few buttons, then you can select your product. Now we are selecting the product. I can decide, I need an MD, I need a CRDB, I need an MBC, whoever has the rate that I'm looking for. Now I have seen now the mobile banking, mobile money now coming in Pesa to your Pesa. Okay, can we have this this facility? I'm saying, okay, hold on. because we have our regulation. Let's see how we can incorporate you. But that's the things that we are putting together. The next thing maybe for now is to look on the data. We are collecting a lot of data now. The data that the amount of data that we are collecting at the government and the financial institution now needs another landscape, because we have the data. How are we analyzing them? How are we profiling our clients? How do we use those information that we have? I'll give an example. I was one of the team when we are doing automating the gaming body systems. We were trying to do this we call getting all information. What we did is we had to have like every transaction that is being done in a slot machine, or everything that someone is betting. We are collecting that information. We managed to get the information to us. Now how are we going to use them? That has been a challenge now. Therefore, we need to see how we can use this information, how we can use the data that we have, how we can use the technology that is present at the time to make the right decision. The professor said we need to make decision based on the data. Therefore, that's what we see. Data, whoever have the data will be the king. As a government now, we have the data. We have enough information. What we are doing now is how are we going to profile it? Thank you.
Thank you so much, Dr. Sausi, for the 3 main points, which the audience or I will also come back to them. And now let's go to EPIMAC. EPIMAC, you're also working very tirelessly from the private sector. I mean, I'm assuming you'll be talking also from a representative perspective, despite the fact that you're an e-commerce director from Vodacom. So how can the new frontiers of technology be adopted in terms of enhancing delivery of financial services from the perspective of the market that you're coming from in terms of Tanzania, but also from the institution you're representing and the network of mobile payment providers? Welcome, EPIMAC.
Thank you so much, and thank you for the honor for inviting me. I think first I want to correct my title. It's M-Pesa Director and not e-commerce director. I think before I respond, I want to take us through the journey of where mobile money came from. And if you understand that, then you understand how can we unlock future use cases or future innovations. We're all at an age whereby we remember what it was to send money back home 15 years ago. I think convenience was a big thing. If you look 15 years ago, for you to be able to transfer money from one person to another, either use a bus, some were putting in envelopes and so forth. So when mobile money came, what it solved was really convenience and safety. And because it was a perceived also problem from the consumer side, that created adoption. And I like to use the word perceived because practically, as you practice business in marketing, for you to solve a problem and get adoption, it does not matter only what you think is value, but what also the consumer think is value. That's what makes a difference. We are sometimes challenged when we push for digital payments. We push a lot of merchant payments. In this room, we all agree that cash is a problem. But to my grandmother in the village who has been living in cash, with cash for many years, seeing generations in cash, until we're able to convince that person that you have a problem, they won't adapt. So I think for me, the point I want to make is for adoption of any innovation, the innovation must be first designed for consumer to address the key problem that the consumer is facing. And that's what mobile money did back in the time. And how do you do that? You do that by, number one, using data. I'm happy that you also mentioned here. And we have a lot of data. I mean, all of us are in institutions, we collect a lot of data from consumers. I think the only thing is it's not number one, the storage. So it's like all over. It's not centralized. And then we don't have enough data scientists to look at the data. I'll talk later on it, expand more on it. So I think that's the main challenge. And not only online data, but also we need to measure ourselves in the market. Because some of the things you can only unveil when you connect your online data and your offline data. I'll give you an example. We are doing segmentation for a certain product like 3 years ago. And you segmented a customer out high value customers, you know, your high value customer, your mid, you know, the traditional way of segmenting. And then we found some key trends on some of the customers. They transacted very high usage because we segment based on usage. And in our minds, we thought these are, you know, the bank CEOs, the, you know, people, you know, we can say are rich. When we went to the market, what we found was very interesting. These are people in the local markets. They are the dalalis who are receiving, you know.
Who are dalalis for those who don't understand?
So these are people, the middlemen. They're receiving, you know, farm inputs from the regions, sell them and then send back money. It's high volume. Now imagine if you design a product, getting this person from the boardroom, just by looking at high level of your data. I mean, you design a wrong product, and then the product. So I think every single week when I look at TVs, radios, I see new products, new products, new products. The question I ask is, I mean, what are we solving? And that's why after 6 months, actually we launch products and they're not picking because they're not addressing the key issue. So I think for me, the big point that I want to really emphasize is on product design and looking at data, but also immersing ourselves in the market. And then also on the same aspect, designing for consumers, I think we need to also look at inclusive design. I mean, inclusive design here, what I mean is, do we understand our customer? Because when you say consumer, it's not one person. Can we know our customers? FinScope report, interesting, shows that only 54% of adults know multiplication. Only 56% of adult population know division. But you see a lot of campaigns saying 10% discount. I mean, who understand that? Right? Even our interest rate, who understand that? When you say interest is 15%, who understand? So I think it is inclusive in that aspect. We understand our customers, we understand their behavior, and we really design for them. But inclusion also means so excluded, like marginalized, like these people with disability. We launched recently at Vodacom channels that will also support people, you know, have difficulties in hearing. I mean, deaf, to support them because, you know, they also use our financial services. If they want support, how do they get support? Right. So we started positioning in some of our Voda shops. People can, you know, can support them. But another issue for adoption, which is also key, is what was discussed early, is on ID, identification. I think we have a big issue, and it's an elephant in the room which you're not addressing. If you look today, FinScope report shows very clearly that despite the good effort that we've done on NIDA, but only 57% of the population have NIDA IDs. Right? So, SIM card and phones is a basic right. If I'm blocked from accessing it, either I use indirect way or I'll be completely excluded. So what is happening in the market is, I mean, I'm a father, I've got my wife, I've got my, you know, housemates. All of them are using one ID. What that creates, it will be very difficult to unlock future use cases. Because if I want to create a product targeting women, I don't know if is a lady or is a man. It's very complicated because you cannot. So I think we need to really come with a solution that will make it easier for people to access, I mean, let's say like digital KYC, which will be inclusive. I mean, everyone will be able to get an ID so that they can access financial services, because otherwise it's going to be a big chaos in the market in terms of innovation and technology going forward. So I think I'll end with those two. Maybe later on I'll expand on other 2 points. But conscious of time, I'll end up there.
Thank you. We'll get time to go. Thank you so much. Epimac, a round of applause for him. And now we go to Engineer Ndomba. You head the e-government. E-government. So almost like what we've heard from Dr. Sausi, but then from a very bigger picture in terms of the e-government initiatives that you have and what you've been doing in building up a digital economy in Tanzania. And so what government initiatives do you currently have or are foreseeing to progress towards that will really elevate this country to the next level of providing it to become a really digitized economy, but not only from the government, but also facilitating efficiency that will enable government efficiency in terms of the market? Welcome, Engineer Ndomba. Thank you.
Thank you very much. I will start with giving a simple definition of the digital economy. The European Commission defined digital economy as the economy based on digital technologies, while the G20 defined the same as a broad range of economic activities comprising of all jobs under the digital sector, as well as digital occupations in non-digital sector. So it covers the whole spectrum. Now back to the core question on what government initiatives are towards digitizing the Tanzanian economy. I will speak of 6 areas very quick. The first one is infrastructure. For the digital economy to work, we need a functioning infrastructure, and that we have the basic facilitative infrastructure like power, but we have the main one, the digital infrastructure. The government so far has a national ICT broadband backbone, which covers all regional centers, and there is an effort now to reach all district centers. And also there is an expansion of the aggregation points, those points where you can tap the digital services from 40 to 67. And also in ensuring inclusion, the infrastructure goes to rural areas. There are areas working on the power part, but Universal Communication Access Fund is working on the communication part in collaboration with MNOs. And so far, we have an overall coverage by population of 96% on mobile. But that is not the whole 96 can support the digital economy, because based on the technologies, we have 96 for 2G coverage by population, but on 3G we have 77%, 4G we have 65%. And now the main effort which is being done by the Universal Communication Access Fund is to upgrade the 2G to 3G. That means to lift the 77% to much higher, to be able to come to 96, and that will be the whole population will be 96% will be covered, will be able to transact on the data layer. The second part is governance and regulatory environment. The government has established some institutions as well as some legislatives for enabling the digital economy in Tanzania. The institutions include the Ministry of Communication and Information Technology, the TCRA, E-Government Authority, as well as the ICT Commission and some ICT universities. But only the state part, we have this Cybercrime Act, Transaction Act, Personal Data Protection Act, and E-Government Act. All this is just trying to create a better regulatory environment for the digital economy to flourish. Also, the government has been working hard on the building up enabling platforms and technologies. Here we're talking of shared platforms like the government e-payment gateway, the TIPS, which was launched yesterday. We have, just for information, we have water utilities. Now they have one platform for the whole country. And all this together with government enterprise service bus that allows the government system to exchange information. All these actually are connected to all banks as well as the MNOs to simplify the payments and create an environment for the digital economy. The other effort, the fourth one, is on the human capital development. I think everyone is aware, the government is working on reviewing the curriculum for the schools and colleges to accommodate mainly STEM, means science, technology, engineering, and mathematics part. There's digital clubs and TCRA, which is open to the public for capacity building. We have incubation centers and internships available for various institutions, including the e-government authority. We have about 100 openings for interns and volunteers. Now they're working on that. The main aim is to build capacity on the new technologies and give the environment for developing the skills for our youngsters. And the fifth one is cybersecurity considerations. This part, the government has done a couple of actions. First, operationalization of TZSAT, which is under TCRA for just monitoring the cyberspace of the whole of Tanzania. We have the cybercrime unit with the police force. We have EGSOC for e-government. This is oversees the security of government applications and platforms. We have various skill sets of building efforts. And we have national cyber security strategy that governs or directs how we should keep our cyberspace secure. And recently, the government launched the Commission for Personal Data Protection. And this is responsible for ensuring operation of the personal data is secure in the country. And my last part is on the research, innovation, and adaptation of emerging technologies. The government provides internship for youngsters in emerging technologies of artificial intelligence, Internet of Things, machine learning, blockchain, big data analytics, and all those. Specifically in the Center for E-Government Authority, we have even built cryptocurrency infrastructure, and is a pilot. Our objective is not to work on the policy part. You know, there's a BOT working on the policy. We're working on the technical aspects of it, and we have a team just building capacity as a country. Whenever the government decides to go for cryptos, then we should have that capacity and the knowledge. So we have tested the blockchain and the underlying infrastructure, the blockchain and the CBDC, the central bank digital currency, and the commercial one. So all these are areas we are trying to build capacity to make sure we don't be taken by surprise. And lastly, I would like to say the key issues to be considered in adopting the digital economy. The first is to make sure we involve all sectors of the economy. It is not a technical issue. It is a business issue. The technical is just for as an enabler. And the second, I think it's better we facilitate and formalize online businesses. There are a lot of online businesses, but they are not, I would say they are not formalized, and that we cannot get much out of it. The third part is enhancing digitization of government operations and strengthening whatever I said before. And the last one is increasing citizen trust on online services. And that means we're talking of privacy and security, cyber security assurance, and service availability as well as user-friendly systems. Thank you very much.
Thank you so much. A round of applause for Engineer Ndomba. Ladies and gentlemen, I will open the floor, but I want to go back to Dr. Kamal and the rest of the panelists present here for only one question. And this question relates to, so where are we going from here? I've heard us talking about emerging technologies. They've been touched here and there. We saw the presentation from Professor David West. And we heard from Kamal the practical issues that create resilience in terms of ensuring that you proliferate, you create ubiquitous services across an economy to retain resilience. But what next? What are the new frontiers? What are the new ways to look at things? Just with a few sentences, if you can just pick one or two, either you're addressing it from a perspective of regulators, could be you regulators do something better, or we in the market, we should push something better. I'll start with Mr. Kamal. Since you're online, we give you advantage of giving us advice for the future. Over to you. Kamal, are you still there? All right, so Kamala's logged off, so we'll start again. If you don't mind, we start with you, Faris. Thank you.
Yeah, very briefly. We spoke earlier in the conference and throughout on the question of cashless. So let's take a bit of a stock on what it means to go cashless. FSDT came out with a report earlier this year that indicated that still the vast majority of transactions are in cash. And we've had mobile money now in Tanzania for almost 15 years. And if take one segment, say grocery segment, where Kamala talked about this in terms of resilience of payments, everyone will buy groceries every day, regardless of what's happening in the world. 98% of grocery payments are in cash in Tanzania right now, according to the FSDT study. So the question then is, if digital payments are available, widely available, why is it that consumers are still spending in cash? And I think this comes back to questions of value proposition, questions of trust intermediation, et cetera, et cetera. I think one thing we would very much need to focus on with respect to moving towards a cashless society is to understand what are the incentives that take place when either online or digital transactions happen. So I'll refer to my colleague here who mentioned on online payments. Right now in Tanzania, there's a huge social media industry around e-commerce taking place. Right? You post something on Instagram, someone goes and buys it. But in fact, most of those payments aren't even happening in digital. It's an e-commerce payment that happens in cash. What happens? They don't trust. There's simply a lack of trust in the entire infrastructure payments ecosystem. It exists. Now the question is, how do you move from a system based on money movement, which is taking money from one individual and moving it to another, into a system based on commerce facilitation? Okay? If you look at credit card payments that take place all around the world, the value of the credit card payment isn't in the movement of the money, it's in the facilitation of the transaction. So Amazon has become a $1 trillion company because credit card payments exist. If credit card payments did not exist, Amazon would not exist. Okay? Now you're attempting to do e-commerce in Tanzania. Actually, the mobile money infrastructure does not address the issue of risk the way credit cards do. Okay? So how do you build trust facilitation into the payments ecosystem? And one of the things that we're doing, in particular with M-Pesa, via Sarafu. So Sarafu is the e-commerce engine for the retail shops. The next step for us in terms of going from cash to cashless is to now build in the incentive for the shop owner and the actual end consumer to purchase digitally. Okay? And we are, in part, the reason we're building this ecosystem between M-Pesa and Sarafu and Pay is to facilitate that trust required and that incentive required to actually go cashless. So unless you address the entire value chain from the manufacturer to the retail shop owner to the consumer, understand what are the points at which they decide not to use digital, you won't achieve that result. So that result must be achieved through understanding those incentives and building those value propositions out. And that's one of the things that we're trying to do with M-Pesa is to understand how do you address the incentive, how do you build the product, how do you understand what is the consumer's perspective, and then address those challenges as they come.
Thank you so much, Faris. Over to you, Mr. Engineer Ndombo. What's the future like from the government side on digital issues?
I believe the future of financial services is dominated by digital-enabled financial services. And what we need to do, I believe we need to embrace the emerging technologies, readiness to invest, and readiness for transformation. But on top of all, we need these top players to be collaborative. We had, for example, we had my colleague has mentioned here, there was just a simple issue to share some sort of payment, and then collaboration has been a bit difficult between the players, the service providers, payment service providers. So moving into this direction without collaboration, you will not get much out of the technology. The other thing is for regulators and policymakers to be proactive in adopting the new technologies so that we have adjustment on the regulations to suit the new environment instead of taking much longer or number of years to revise our regulations. Lastly is to invest more in capacity building, both for workforce as well as the clients and general public. Thank you very much.
Thank you so much, Engineer. Yeah, proceed that with Dr. Sausi. Over to you.
Yeah, thank you very much. On the perspective of the innovation and where we are going, first I would like to look on the quality of the product that the player outside there are giving out. What we have seen with this emerging technology, we can now have a very good researched product, the product that can be stable, product that can be secure and reliable. Therefore, once we have that with the technology that currently is emerging, then we see that we'll be moving forward with very well structured product. I will give you an example, just a little one. For instance, when we look at the product in insurance perspective, we had this product group insurance, Bima Vikundi. I think you all know that. That was one of the brilliant products in the market that came, and I think everyone here, we either participated or we were involved in finding the information. But when we look at this product, on my perspective, was not very well researched and was not very stable. The first year, most of us, we went into that product, but unfortunately, then we started going out. At least on my products, on the groups that I was, I can tell you 50% were out from the product. Therefore, what I want to put here is the product has to be well researched. The product has to look at on the customer. Customer awareness should be very well. With the emerging technology now, we can use VR, as the professor said. We can visualize the product even before getting in. There's that thing we call gamification. We can have a product that is like you are playing a game. You're just playing a game, but you are already in the product. Therefore, that's the thing that we want to see the future. You have to look at the experience. For instance, if you give a product to the rural area, which we are talking about the Internet of Things. I don't have even electricity. How can I use the Internet of Things? Therefore, we have to look at the product with the emerging technology. This works fine in our environment. Thank you.
Thank you so much. I can't agree with you. Being real, being appropriate, and focusing on what's happening in the ground. Over to you, Epimac.
Yeah, thank you. I think when I look at the future, there are a couple of things which are changing. Number one, I think in the next 2 years, we're going to have more smartphone users than feature phone users, which is a good thing for the economy. I think the penetration of smartphone in some of the telcos is around 40%, and it's growing at a very fast rate. So that will really change how we interact with our customers. Secondly, I think the future will need a lot of what we call hyper-personalization. We spoke in the morning here about customizing products. So today we have got what we call static products. I get the same offerings as anyone else, but with technology now, AI and big data, we're able to give you the products based on how we know you, hyper-personalization. So I think that is very key. Using technology also to recommend products. Today you get an SMS saying buy this product. And actually you completely, you don't even know you want that product. In the future to see is we'll be able to predict more and know which product you're going to consume. Technologies will change the way we support customers. So now the discussions around what we call beyond real-time customer support. We are able to detect the problem before we know it and fix it even before you as a consumer know it using AI and big data. Technology also impacts the way we do our business in terms of what we call customer value management. So in mobile money and telcos, and I believe in any business, you have your acquisition strategy, you acquire customers, but also you've got your churn. A lot of customers are leaving. with technology now, we'll be able to predict before you even chat. We'll be able to know that in the next 3 months, Mr. Kennedy will leave the network, and be able to know why you're leaving, and be able now to really target you with respective reactions to make sure that you continue. So I think technology, I think one big thing that we need to invest is talent, capacity building. We have shortage of talent in emerging technologies in Tanzania. I'm now managing a crisis. We've been able to train a lot of young resources from our universities, but now they're up for grab, everyone. So it's a sign that of a big issue on talent. Yeah.
Thank you so much, Epimac. A lot of points that are coming out from all these discussions. Professor, over to you.
Thank you very much, and I'll be very brief. I think just responding to some of the things in terms of what the future looks like, I think cashless is a myth. We're not going to go cashless anywhere in the world. We're going to go cash light, but not cashless. Then I think also let's be mindful that technology is not a magic bullet. You know, technology can do everything, but then again, it's not a magic bullet in that sense. So I think it goes back to what I think Ahmad said in terms of what's the proposition. And we really need to think about it from the lens of the customer. And I think this is where I want us all to take a step back. Who is our customer? What are the behaviors of that customer? And what context is the customer operating in? So I run a product innovation lab at the business school, and we bring financial institutions in to help them think about products for the underserved. And one thing we've learned is that a lot of the products they've built, going back to your comment regarding the uptake is not very high, is that they've been built sitting in their offices, not really going into the field and understanding how are we going to engage these customers and build around their context and around their needs and around their problems. So we build an app and we say, oh, I have an app. But then again, all the customer wants to do is a very simple thing. It might be embedded in the app, but it might be too much for him to do. So we need to take a step back and be more customer-centric. We need to do what we said. We need to build talent. And the talent is not just on the production side, but also on the consumer side, right? Because the customers also need the re-engagement. And I think when we're thinking about this, we need to think about the domains of the business models we're working in. If you're in a B2B context, it's easier, right? If you're in a B2C context, it's a bit more difficult. So those concepts and those ideas, but it's about being wise enough to apply the technology in any of those sectors. And I think most important, how do we co-create with our customers? How do we ensure that they have a sense of belonging in the product or service we're developing? Thank you.
Thank you so much, distinguished panelists. Can we just give them a round of applause as we move to the second and final stage of our panel discussion? Now it's a floor discussion. And I'll give the privilege to, so many hands. But before you get your hands, today is Women's Day, and we have a special woman here, Angelica Pesha, Tigo Pesa Director in the, so I don't know where you are, you can just stand, take a mic, and ask your question or make a comment that you want to do. Please, Angelica, welcome. And I give you 3 minutes. Welcome, you can take the podium. A round of applause for Angelica, please.
Good afternoon. Before I speak, thank you to the amazing panel. I think you delved into a number of interesting ideas and activities that are going on in the market. So I'd like to comment on 3 aspects. One, we are talking about what future do we want for the financial industry. I think we cannot say we can go anywhere else without collaboration. Collaboration is very key now and even more as we go into the future. But I would like to highlight that this collaboration needs to come at a point where both parties are getting a win-win situation and not a collaboration that is looking at either party. So it's very important for us to collaborate, but ensure we are getting the value from each of the parties that are involved. So it's very key. It's not about collaboration for the sake of collaboration, but what is the value that both of us are getting so that we can serve the customer even better. The other aspect, 2 challenges that we all have to take care of And I'm not sure how, because I feel we haven't yet gotten there. One is the trust. We are talking about customers not having trust in the financial services. So what are we doing about it? How are we building that trust? It's not something that any of us can do on our own, but again, it comes back to collaboration. We need to work together as the players in the industry, the government, the central bank. How do we bring back the trust? Customers can trust digital as much as they trust the cash they see every day. What do we do? What are we going to do about that? I think until we can work together, collaborate to get there, we still have a long way to go. Lastly, the panelists were talking about the future. And in the future, we are talking about specific personalized products for customers. How do we get to personalize these products if we don't even know who our customers are at the identification level? So we still have NIDA as the biggest challenge. We have a lot. I think in one of the presentations today, we had about 37% of people who took loans are not even, identified as the same people or the real people. So how do we get that challenge out of the way? Because if we want to really reach everybody, we need to be able to identify every single person so that we can give them the right services and the right value. With those comments, thank you very much.
Thank you so much, Angelica. Ladies and gentlemen, we'll start with the online question, which are going to be read by the MC, and then I'll need to take out my specs. So I have Dr. Mushdish, I have Dr. Omadi Jireli, and then we'll go to, can't see you properly next to, is it right? Patrick, yes, Patrick. And then, okay, so I'll start again, just continue. I'll go with the order. I'm getting confused now. Please go.
Thank you, moderator. We have a question from Orbit Security. The question states as follows: could disintermediation in the financial sector become a new normal in the face of technological advancement such as blockchain and mobile gadgets? Where do regulators stand? Will we need to rethink monetary policy implementation, or how about cross-border transaction monitoring? And do we need monitoring after all?
Okay, that's one. Second question, I saw you on your note. Mr. Ndomba?
He has the question.
Oh, he has the question. So this first question will be addressed by Professor, and probably, all right. I'm just distributing the questions first. Then Dr. Munish, and then you come Mr. Rayleigh, and then Professor Ishongoma for your questions, and then we take the other questions. 3 more questions. Please proceed. The mic.
Okay, thank you, Chair. Mine is not a question, actually, just a comment. First of all, thank you very much, all the presenters, for the very good presentations. But I just want to make a comment based on the presentation made by Mr. Kamal Kader from Bangladesh. That I totally agree with him that the fortune is at the bottom of the pyramid. When we look at the income of the people, we have very few at the top and many down here. Therefore, the fortune is at the bottom of the pyramid. Now, if we have technology is going to help us in that, is going to change. And actually, the example he gave, and equating it to our beautiful Serengeti here, is very relevant. Now, I have some practical example from my previous undertakings, which actually helped us. In one of the organizations I led, we came up with a strategy, and the title of that strategy was going to the masses. It means going to the bottom of the pyramid. And it actually helped to turn around the organization. Of course, in one aspect. But when we wanted to do the other aspect, we had some issues with other stakeholders, then it stopped. But that is very, very important. But my second point.
And Richard's going to be brief. Thank you,
yes,
Doctor.
very briefly. Why do we not have these uptakes on cashless, people using cards? I think we also need to relook at the cost. Cost involved. Going back again, we need to go to the customers and talk to them. Because sometimes customers think that if I withdraw my money and do these transactions using cash, is cheaper than using these digital. Yeah, but that I think is the issue here. I know there will be some defense out of that, but that is the key issue. We need to look at it. Thank you.
Thank you so much, Dr. Masood. Mr. Raleigh, over to you for the comment or question, and then we go to Professor Shengoma.
Thank you very much, Mr. Moderator. I just wanted to commend the panelists for a very good presentation, and I was really impressed by the presentation of Mr. Faris and Mr. Nomba, the head of government Mtandao. One thing that I think let's go out of this meeting with is a very firm resolution. We've been talking about all these measures, and I'm really impressed with what head of government system was saying, that there is everything. But if you compare us and Kenya, you find that Tanzania, the cash transaction are almost 80%. 20% only is done digitally. So how do we come out of this situation? I think we'll be meeting here next after 2 years with the same topic of that we have a system, we have this problem, but there are no solutions to the problem that is existing right now. So I would suggest now let's come out with a roadmap that will enable us to change these problems, change all these challenges into solution. I think let us agree on that. The other thing is just like what was pointed out by my colleague Mohsen, we are having a problem of a conflict between the policies and implementation. For instance, if we're encouraging people to use digital instruments, for instance, if one wants to draw from his account to a mobile bank, the charges that are imposed on that particular individual is so exorbitant that somebody gets discouraged. So what are we saying? Are we saying that people should continue be queuing on the banking halls and create havoc? I think it's time now to reconsider the costs that are charged for digital services be lowered down so that people can access these services. Chair, thank you very much.
Thank you very much, Mr. Reddy. We are required to walk the talk. Professor Shengoma, please, over to you.
Thank you so much, the presenters, as well as Dr. Mohsen and Mheshimiwa, Mr. Raleigh. I think the issue of costs. I've seen you talking about the future. You are considering trust, but you have not talked about the cost. I think it's very, very important. Let me give you an example. There was a day I was there at Mlimani City. I wanted to buy something from LC Walkiki, and they told I didn't have enough cash. Then I decided to use Lipa number, and then 3,000 was gone, just for one transaction. Imagine if I withdrawn my money from the ATM, how much would I have paid? I think it's less than that. Withdrawing 400,000, and I can make all my transactions there at Mlimani City. So we have to think about the costs, because look, if me, Professor, I'm using cash, what do you expect people from the village? Yeah, unless they are not able to make that analysis. But if they are able to make that analysis, they will not go with this, I don't know, LIPA number or whatever transactions. So please, we have to look on how to reduce costs. I liked the example from Sarafu, the issue of the cost of sugar, and how you are able to come up with that, I don't know, digital payments that control that. Then that I was wondering, is that also incorporating some other products which are not offered or produced by ASAM, or it's only ASAM products? If it's all other products produced by other companies, maybe it will also help, because I look at it as a way of reducing information asymmetry and taking out those people who are taking advantage of that. But again, can we use that technology, as you have seen in my presentation, high level of differences in pricing of loans? So if you take sugar as a digital loan and they try to invent more, can we have that technology being used? For example, I want to borrow, and then I go to that, that app, and I could see where I can borrow at relatively better costs. And I think that way, transparency that way, can even force the providers to think more that, okay, let's go on value, but not because you are the user of Voda, you have only access to Voda products. And that's where the issue of collaboration coming in. When we are talking about thinking the future, I was still thinking, is there a situation you can have only one SIM card and all the providers integrated into that one SIM card? I think that will be very wonderful.
Thank you so much, Professor.
I don't have to carry several, if I have 3 lines, I'm forced to have two. And we are talking about managing the environment, yeah? So I can have one and one SIM card in my phone, and I can access all the services. Talking about the future, is that possible?
Thank
and
you.
The next, the last one,
all right,
about the personalization of service. I think here I liked the issue of bringing NIDA into it. That is there a situation where all people maybe who can access these services having NIDA, and then we personalize? Because remember, we have our kids, and our kids are encouraged to use these gadgets, yeah, to learn. One way of learning, and another way, you know. Then I was wondering, can we make NIDA to start from the age of 10, maybe, so that even this category from 10 to 18 to have access to this service, but please, then you personalize. You don't send those adverts about borrowing to the kids, but you can encourage them to save. Maybe they can just save a small amount.
Thank you,
and
Flo.
then you can also encourage them to borrow, but then they borrow 500, 1,000. Yes, thank you.
Thank you so much, Prof. For interest of time, let's hear the response for, there were comments, but let's get response, and then we'll go to 2 more last questions. But we'll start with Faras. You have direct questions. I think you picked them. Yeah. Can you give him the mic, please? Pass him the mic. And just be brief when you answer those questions.
Yes.
Others will take them from during lunch for bilateral discussion. Go ahead.
Thank you for your questions. Just answering them quickly. One, Sarafu sells all products. So we don't sell only ASAM. We sell even Afia. We sell, everybody is on there. So the price control mechanism that I mentioned for sugar is being used by multiple manufacturers right now, including even Pepsi came to us recently and said they're struggling to control their price. So we offer it to everyone. It's not based on who's manufacturing. You mentioned the marketplace model. Actually, we are doing that right now. We're working with a number of banks to create a transparent credit model on the same application. So in fact, right now, we are offering credit to any trading shop in Dar es Salaam that they can purchase their supplies via that credit, and we hope to create that transparency on the marketplace so they can decide which service provider they want to provide the credit to purchase their supplies. With respect to the SIM issue you raised, Azampesa itself is SIM independent, so you don't need to have any particular SIM to register for Azampesa mobile wallet. And that wallet also, we are looking to very much address cost from Azampesa. So right now, we have already determined P2P transactions on the Azampesa network to be without cost. So we are very sensitive to that issue, and we also understand for us, the key for Azampesa is commerce facilitation, not money movement. So commerce facilitation meaning how do you get a buyer and a seller who are unknown to each other to transact using that digital payment method and be trusting, using ourselves as a trust intermediary, which is essentially how e-commerce has proliferated across the world through credit cards. Credit cards address the risk issue by acquiring the payment from the consumer at the end of the month. Mobile money has still to build that feature, so we're really focusing on how we can develop Azampesa in that direction.
Thank you so much. And now there were two questions, one relating to NIDA. I'll ask Mr. Ndomba to respond to that. But then there was another comment relating to walking the talk. Just Dr. Sausi, if you can mention, are we going to come up with a roadmap? Are you guys going to ensure that we all sit together and make Dr. really happy? That next time we're not coming here and discuss about cost, about cash light and the like. So a quick response to that. We start with Mr. Ndomba.
Thank you very much. There's a question from Mr. Martin Kawura on the coverage, 96% for 2G. So let me clarify with you.
Yeah, please go ahead with the first one.
Yeah, it's written in Swahili. Asilimia 96 wanatumia 2G. Hapana, haikuwa na maana hiyo. The coverage ni kwamba wamefikia, kwamba pale walipo amefikiwa na teknolojia ya 2G. Kwa hiyo akiwa na handset ya 2G anapata mawasiliano, lakini akitaka service ya 3G hataweza kupata. Lakini wale asilimia 77 wamefikiwa, wanaweza kutumia 2G, wanaweza kutumia 3G. Wale asilimia 65 wanaweza kutumia 4G, wanaweza kutumia 3G, wanaweza kutumia 2G. Na maana wamefikiwa na teknolojia hiyo. The second one, let me reply on the unique identity.
Exactly. Yeah.
That's a very big initiative, and Madam President has directed to make sure we have unique ID for the whole population, and the effort is ongoing in collaboration between the Ministry of Information and IT and the NIDA. They're working together to come up with Jamii number that we identify uniquely from birth to death and for foreigners from entry to exit. So this is on. That's a very big thing. Yeah.
Yeah. Thank you so much. And when do you expect that to be completed? The market is eager to hear. When will the project end? Lini tunapata Jamii?
This, I think, the initial time frame was 18 months to 2 years.
Mm-hmm.
So probably it can go a bit faster than that.
Yeah. All right.
Thank you very much.
Dr. Sauti.
Yeah, maybe just to add on what he said, we expect that to be at the end of 2025, maybe. Because as we speak, the team now is in place and working on, we have finished the design, because we collaborate, Rita, NIDA, and Zanzibar ID. Therefore, the technical team now is in the place. Therefore, we expect maybe next year, end of the next year. Okay. Come back to the Mr. Ray question about we are just saying a lot of discussion here. Maybe to say we have been putting some of things in place. With your neighbor there, we have been working with this for like last 3 years, putting in place a digital economy strategy. And then we have been working on this, and this one has already been approved. And we have been working on the aspect that when we have this steadily and moving on the direction, then we hope by, I cannot say next COFI, no, maybe the other one. We have a lot of strategy that we are putting, and I can say most of the things that we need to allay from what we are saying now have in place. For instance, they said about the infrastructure, they said about the digital literacy and all those in application. You compare this us with Kenya. Yes, we agree with that. One of the things that we do already have. We have a number of products that are in market which are performing very well, even more than what Kenya has. But the problem is the professors are not publishing outside there. Thank you.
Thank you, thank you. You've thrown that very, very important point. We need to communicate what Tanzania is doing. That's our weakness, and we have to admit that. All right, so now there are two more questions. Yeah, we take two, and then there's an online question. Before you come, Patrick had raised his hand for so long. I think, yeah. Patrick and the gentleman right ahead of me, yeah.
Thank you very much, Kennedy. My name is Patrick Mususa. I'm the Executive Director at Tanzania Institute of Bankers. I only had a comment and suggest, just briefly. I had so many, but I want to stick to one. We have seen it in my recent experience with the capital markets, and I recognize the presence of the CEO of CMSA here, Mr. Nicodemus Mkama. I was grateful to have worked at the capital markets for 2 years, and I've seen banks, comrades to the financial, the telcos who are providing financial wallet services, advance to the capital markets very quickly in a short period of time of less than 5 years, if I'm not mistaken. They have taken up roles such as market intermediaries, bond dealers, market makers, and so forth. I think while we are talking about the retail customer, we should be thinking of ourselves as problem solvers, and I agree with Epimac. But so far, we've provided them general savings and borrowing facilities, but we haven't provided them investing facilities. And I think the bouquet of services that are available to the common man are more than just borrowing and saving. And I would encourage telcos to also, like banks, think about other opportunities in the capital markets where it's still very much untapped. We recently saw the CMSA do something very wonderful recently with the support of the stock exchange to launch Hisa Kiganjani, enabling investors to buy from their phones. TIPS has just been launched, and the two just need to integrate, and it's a very simple integration to bring this to the common man to be able to now reach the capital markets.
Thanks, Patrick.
But with that, the inclusion then will provide the platform for you to make other services more affordable and more accessible and more resilient for your consumers. Thank you very much. I appreciate it.
Thank you very much, Patrick, for the inclusive investment that needs to take.
Yeah, thank you. Thank you very much, Chair and the panelists. My name is Dr. Godfrey Joaquin from National Cooperative University. I'll be very briefly. One of the panelists said that they are doing well in terms of infrastructure that can support mobile connectivity. That's great. However, I thought that because most of the sub-Saharan Africa right now are ranked very low in terms of mobile phone connectivity, including Tanzania, that is ranked very low even when you consider East African countries. And if you look at data from the global system of mobile communication system, you will find that European countries, America, or OECD countries are now struggling to enter into a 6G generations, while we in Tanzania, we are now considering issues of 3G, 2G, and 4G, and 5G is even very low. I thought, and I think that perhaps my brother there can say more, why can't we think of the infrastructure that can support 6th generation right now? That's where the world is heading. That's first. Secondly, in terms of cost, you really wonder that I was really wonder if we have 20,000 Tanzanian shillings, you get a strategy bill for a month, and you cannot finish it. But here in Tanzania, with 10,000, you're getting 4G that can be finished within 1 day.
Thank you so much. One last question here, and then we finalize. I have only 5 minutes. You're finishing at 40 past. So your question should be very brief, Mr. Sostenes, and directed to any of us, or if it's a comment, please go ahead.
Thank you. I have 3 comments, but they can be also reinforced by the speakers. The first one, with respect to use cases, and from my friend from Nigeria, what do you think will move the mountain in terms of money flows? Now we have tips. Most of the use cases are P2P, and that's the story we have in Tanzania and many other countries in Africa. What would be this killer, app or use case to really drive cash light economies? That's one. Secondly, to the banks. I'm looking at the future of credit. Since this is about intermediation, therefore allocation. The revenue models are still very interest-based. We see technology bringing new avenues for revenue generation. So we think about credit creation. We have digital credit right now. What will happen to the retail banking, at least to the retail banking now, when digital credit for businesses is actually possible? Where will you be in terms of flourishing the business? The last one is on data and analytics, and it starts with understanding what works, what doesn't work. So in this meeting, I also expected us to look at the developments we've made from the Financial Sector Development Master Plan, for example. There's a promise that we want to contribute up to 10% of the GDP by 2030. Where are we today? And where are these developments going to take us? So taking stock every time and again, understanding where we are doing, what we are actually achieving, what we are failing, and how we are failing would be very important, so that we can actually push these innovations, recalibrating the resilience discussion, building scenarios of the future, because resilience is now, looking at crisis 27, 28, COVID is not helpful enough.
Yes, give us 2 minutes for the professor to respond.
Thank you, I stop there.
Thank you so much, I really appreciate it. Both you can respond on the 2 questions.
Basically, thank you very much for the question, sir, but I think the killer app would depend on the context. In some markets, it's G2P, right, in terms of government payment. So I think he spoke about the government payment gateway. To what extent is that facilitating social investments and payments? So we have, I think for me, what I'm hearing is that all the pieces are there. It's now how do we stitch them together to drive the application and drive them throughput down market in that sense. So I think that's really it. And don't forget that these businesses are scale. So even when we want to drive down costs, we forget about costs to serve. We're only talking about costs to use. How about costs to serve? Because the businesses also need to stay in business. So I'll stop there. Thank you.
Thank you very much. So with time, we'll just skip the other responses. And because the MC is already there. Please, ladies and gentlemen, I've taken notes. I'll submit them to the Secretariat. But we've had very outstanding remarks, points, actions, and key initiatives that we need to take forward from here. Without, please give a round of applause to the panelists. And thank you very much.
Thank you very much, Mr. Komba, the moderator of the session. And we are about to wind up the event. Please, the photographers, we'll take a group photo, and while we are taking the group photo, I wish to announce some few people who are needed outside through that